The big news this morning is that the inflation numbers were released for September. As we have been telling you nonstop since last year, inflation is not transitory. The CPI number came in at 5.4%. This is a 13-year high. The CPI, the consumer price index, is as high as it was during the financial crisis. Absolutely insane. Core inflation came in at 4%. If you see here, we have first the tweet, U.S. September consumer prices increased 5.4% from 1 year earlier. Core CPI up 4% over a year. We'll get to core in a second and the nonsense that is. But first, let's start with the consumer price index. 5.4%. Is that crazy? Is it not? Well, let's look on a relative basis. If we look around the world at all of the different CPI numbers, their year over year percent change, what we find is that the US sucks. Simple. Just real simple. The US sucks. The only countries that are doing better from an inflation standpoint are Venezuela, Argentina, Turkey, Brazil, Russia, Mexico, and Poland. The United States sucks. Our inflation is higher than places like the Philippines or India, maybe even Australia, New Zealand, Sweden, Finland, Hong Kong, Portugal, Indonesia, Saudi Arabia, and Japan. The US inflation is absolutely absurd. We're over 5.4%. People in the Philippines and South Africa are better off than they are here in the United States when it comes to CPI. So what exactly does that mean? Well, if we go ahead and we look at CPI, over 5% like this, what we see is that for 4 months in a row, CPI has now been over 5%. What exactly is transitory? Transitory is a word that you cannot measure. Does transitory mean it's only 1 month, 2 months, 3 months, 4 months? Well, could it be a year? Could it be 6 months? How do you determine what transitory is? That is the reason why they're using that term, is there is no way to quantify. But CPI has now been above 5 for 4 months in a row. The last time that happened was in the mid-90s, and in the 2008 financial crisis. So you can say all you want, it's transitory or it's not. What we know is that CPI at over 5% is absolutely punishing the bottom 45% of Americans. Remember, when there are high rates of inflation, like there are right now, what we find is that people who hold investments, who hold assets, they are making more money than they ever dreamed of. Everyone's getting rich if you're an investor. If you hold assets, the asset prices are being pumped to the moon by monetary and fiscal policy. The people who hold no investments, those that live paycheck to paycheck or have 100% of their net worth in cash, which is the bottom 45% of Americans, they get punished by this. Not only are they experiencing the same high levels of inflation of over 5% or 5.4%, but they also usually make a majority of the purchases of their monthly budgets in inflationary goods. So things like rent and food make up the majority of the things that they purchase on a monthly basis, and those happen to be some of the most inflationary goods. So if you are in the bottom 45%, you have no investments, you get punished by the politicians and central bankers who continue to go on television and in front of different hearings, etc., and they parrot the talking points of, don't worry, inflation's not bad. Don't worry, it's transitory. Don't worry, it'll come down. Don't worry, it's only in used cars. Or don't worry, it's only in food, or it's only in rent. No, the everyday American feels this. They're watching everything around them get more and more and more expensive. And it's not transitory. It's now been going on for 4 months. We're talking about a situation that, remember, only started in March of 2020. The recession ended more than a year ago. A year later, we still have over 5% persistent inflation. You can say it's transitory all you want. You can try to manipulate words. You can try to hide the facts. But what we find is that the everyday person knows what's going on because they feel it. Now, if we continue on and we look at actually what is driving the inflation, what we find is that there are a number of different parts of the economy that are part of these consumer prices that are actually driving most of this. So if we go ahead and we look that the rate of change, remember, prices rose 0.4% in September, they only rose 0.3% in August. So it actually has gotten worse than it was in August. So do not be tricked by anything you are reading. It is actually getting worse rather than it is getting better. If we go ahead and we look at these items on an itemized basis, what we see is that food on an unadjusted 12-month period, food is up 4.6%. That means that if you go and you buy food, it now costs you 4.6% more. If you did not receive a bump in pay, whether to a salary or to your hourly rate of more than 4%, literally, they are stealing from you because the food that you need to eat, to survive, to be a human, now costs more than it did 12 months ago. And that is ultimately why inflation is theft. And so if we go ahead and we look here, the food at home is up 4.6%. Food away from home is up 4.5%. It doesn't matter where you're eating, food is up. If we then look at the really big ones, energy is up significantly, up almost 25%. If we look at things around gasoline, the gasoline is up 42%, coming in with just massive, massive numbers. If we then go down and we look at used cars, up 24.4%, new vehicles up 8%, and all commodities minus food and energy up 7%. Absolutely nuts. Transportation up 4.4%. Doesn't matter if you're buying a new car, a used car, or you're using other modes of transportation, it is all up significantly. And so what we are watching is we are watching the death of the middle class, and we are also watching the punishment of anyone who is not educated enough to actually buy assets. If you do not have the financial education that is necessary to understand, to spend less money than you make, to take the leftover reserves, make some sort of kind of cash safety net, to create 1, 2, 3, 4, 5, 6 months of a safety net, and then take every single dollar that you possibly have and get it invested in the market, you are actually becoming poor over time. The cash that is sitting in your bank account is being eroded away by this type of absolute insanity. So if we then go and we look at Holger, tweet here. He said, oops, U.S. consumer prices outpaced the forecast. Remember, why is it that the forecast is always wrong? They're never right because they don't know what they're doing. Headline, CPI rose 5.4% versus what was expected at 5.3%. It got worse faster than they thought, which matches the largest annual gain since 2008. But remember, if you exclude the volatile food and energy components, so-called core inflation rose 4%. Now, in this chart specifically, you can see that the yellow line is the CPI and the white line is core. Now, core is absolutely ridiculous measurement. Why? Well, Lynn Alden, absolutely coming off the top rope, between the legs, 360 dunk. If you don't need to eat, use energy, or need some sort of home, inflation's declining, no problem, don't worry about it. Basically, core inflation measures nonsense. It is an absolute stupid metric. And the reason why it's a stupid metric is because the core things that you need to buy are not minus eating, energy, and shelter. Instead, the things that you actually need are food, energy, and shelter. And so maybe what we should actually be talking about is what is the majority of purchases that you make? Food, energy, and shelter. So what's happening in those? And if they were to separate out those three things, what we would find is they're way worse than actually taking them out. So pretty crazy. Now, when I talk about this, everyone says, okay, there's all these numbers. All these numbers are floating around. CPI, core, I don't know. I don't pay attention. I'm not smart. I don't care about inflation. Well, yes, you do. Why? Miles Suter coming again with a great chart and statistics here. The wealth disparity blows out, according to the Fed, total wealth by wealth category in trillions of dollars. What we find is that going all the way back to 1995, you can see that the top 10%, their wealth has exploded. And the bottom 50% has basically stayed the same. They've been pushed down unnecessarily. Now, why is that occurring? When you see the top 10% exploding after 2008, and you see that bottom 50% just staying flat to down, why is that happening? It's simply because they're devaluing the currency, and the people who own assets, their wealth is not being devalued. Instead, it's actually being increased in value. So if I have a piece of real estate and the dollar is being devalued, and I bought it in 2008 for, let's say, $100,000, and they continue to devalue the currency, if I do nothing to the property, I make no improvements, I do nothing to it, I simply hold it, all of a sudden, in 2020, I could actually just sell it for $150,000. I made 50% on the real estate. I did nothing. I simply just held it. I was out of dollars and the dollar got devalued. Now somebody else needs 50% more dollars to buy that same piece of property that I bought years ago. This is what the wealthy know that those who are not wealthy do not. It is not anything to do. Taxes and all this nonsense. You can turn a good situation into a great situation. But if you do not have the basic knowledge to understand, you cannot hold cash because they will devalue the hell out of it. and that you must get invested in markets. Again, the market that you invest in doesn't even matter. Everything goes up over time as long as they continue to devalue the currency. Whether you are holding equities or stocks, whether you're holding commodities, real estate, Bitcoin, it all goes up and to the right over long periods of time because they continue to devalue the currency, and they have only accelerated. It is devaluing at an absolutely historic rate. Now, as if anyone doesn't believe that inflation is high, the Social Security Department has decided that they are going to increase what they are going to pay to Social Security recipients. They are going to increase it 5.9% in 2022 as the Fed effectively caps that mortgage rate at about 3%. So when we start to think about this, you can actually look and say, wait a minute, why is it that the official inflation numbers are coming in at 5.4% or 4% core, all these other numbers that make it look like they can argue, oh, it's transitory, don't worry. But the Social Security Department is going to pay you more than that. Sure, that's a good thing for those people. But the truth is that the actual inflation is not 5.4%. There is nobody who works at the Federal Reserve, nobody who's an economist, nobody who works on Wall Street, nor anybody who works in the mainstream media who actually believes the official inflation number is 5.4%. They know that the actual inflation is 5.4%. The official number is 5.4. But we have heard over and over and over again, whether it's economists, whether it's Jerome Powell and others, talk about the unofficial inflation rate. And the reason is because they are taking bad data. They're using bad actual analysis of that data to get to that 5.4%. You cannot manipulate the data and actually think that it represents what's actually occurring. Remember, when you look at things like the rent increase, they still are trying to explain to us that the rent increases in America are around 2% year over year. But yet we have the actual data platforms like Zillow or apartment.com telling us that they are 8 to 14% as just one example. And so today, what we are seeing is, again, a reminder that the only thing you can do to protect yourself is you have to invest. You cannot save your way to a life of financial security. You must actually invest to be able to do it. Jerome Powell said that there's no impact from the Fed's decisions on the wealth inequality gap because nobody's come into his office and told him that there's a wealth inequality gap that's driven by the Fed's policy. I mean, Stanley Druckenmiller, one of the best investors on Wall Street, openly just went on CNBC a couple of weeks ago and was like, the Fed is responsible for the increase in the wealth inequality gap. They're the number one driver of the wealth inequality gap. So I don't know what they're listening. I don't know if they put on noise canceling headphones or something, but literally, hey, wake up, Federal Reserve. You guys are responsible for the wealth inequality gap. Literally, you are basing all of your decisions on theory. That's not how the real world works. What we are watching is 45% of Americans hold no investments. And so while you pump asset prices and half of your Fed presidents are day trading, enriching themselves to the tune of millions of dollars over the last 12 to 18 months, you've punished 45 million Americans, which is literally about 150 million people are worse off because you guys are making stupid decisions while you've literally enriched yourself.